Well, M&S said like-for-like sales, that's the measure, of course, that strips out the impact of new store openings in the UK during the 13 weeks to the 30th of December, were up 8.1% on 2022. Within that, food sales are up 9.9%, meaning that M&S enjoyed the biggest growth in sales volumes of any retailer during the period, while clothing and home sales are up by 4.8% on 2022. Stuart Machin, the chief executive, said that women's wear had been a standout performer, growing volume and value significantly ahead of the market. But he warned that the trading environment would be uncertain this year and highlighted higher than anticipated wage and business rates related costs of inflation. Meanwhile, Tesco today hailed strong Christmas trade and said profits for the year would be better than expected. It's the second time in 4 months that the UK's biggest supermarket chain has raised its profit forecast. Tesco said that like-for-like sales, that's the measure, of course, that strips out the impact of new store openings, would be in the UK during the 6 weeks to last Saturday, were up 6.8% on last year. Tesco said it had enjoyed particularly strong sales of fresh food, but also highlighted its premium Tesco Finest range, which enjoyed record sales during Christmas week. The shares were up by 1%, but have since drifted lower. Now, the Iranian Navy has seized an oil tanker in the Gulf of Oman. It comes as container shipping firms are continuing to divert vessels away from the Red Sea in order to avoid attacks by Iranian-backed Houthi militia from Yemen. The situation is generating increased business for Windward, the maritime risk information company, which today said it expects 2023 sales to have risen by 31% to $28.3 million. I've been speaking to Windward's chief executive, Ami Daniel, and began by asking him if inbound inquiries had surged since the attacks began in the Red Sea.
They absolutely have. Actually, we're holding a webinar today with 1,000 people. So absolutely, the Red Sea has a huge impact on our economy.
You've served in the Israeli Navy. You've seen the kind of weaponry that these Houthis are using up close. What would your observations be?
Well, one of them hit my vessel. So the specific missile they're shooting called C-802 hit my vessel in 2006. So I know it too well from the wrong end, if you will. This absolutely can drown a vessel. It absolutely has drowned a vessel because the day my vessel was hit, another general cargo vessel was hit from the same missile and drowned. So I think if they get what they're trying to do, you could look at an oil spill in the Red Sea or the Gulf of Aden.
So the likes of Maersk and Hapag-Lloyd are behaving completely rationally then in terms of diverting shipping away from the Red Sea?
Yes, you're right. About 1 of 5 vessels are not traveling the Red Sea, but that means 4 or 5 vessels are still in the Red Sea. Tanker movements are down only 10%, dry bulk only 10%. So yes, car carriers and containers are going around the Cape of Good Hope, but all the rest are continuing almost as is, and I think it's all about money. Listen, this area exports about 30% of container trade. So in other words, most of the toys you buy in London and Hamleys, you go down Hamleys and Regent Street, 50% of the toys are exported via that route. Most of the cars from Japan and Korea and so forth are exported via that route. So that means the blocking of the Red Sea, perhaps all of the Suez Canal in the coming weeks, because I hear there might be an attack of the coalition on the Houthis tonight, which could lead to that, will influence the pocket of every single viewer of your show by just raising prices. I think you can expect car prices to go £1,000, £1,500 each just because of this.
Now, the US and the UK in particular are providing escorts for shipping in the region. Is that working in your opinion?
That's working-ish, I would say. So first of all, we haven't seen anybody drown or die. So I think that's an achievement, and kudos to them for making that happen. And they have passed a lot of vessels through the Bab el-Mandeb Straits. Having said that, the threat is there, and I'm not sure it's eliminated. I'm not sure it can be eliminated this way. The coalition, the US, the UK, France are taking a defensive strategy, not an offensive strategy. So I'm not sure that's going to solve it for the long term, and I think jury's still out what's going to happen. Just an hour ago, another vessel was hijacked just off Oman, probably by the IRGC. So that area is just boiling.
I gather you've seen examples, though, of ship captains refusing a naval escort. Why would they do that?
So we see a few interesting things. We see ship captains refusing naval escort because it's the US or the UK, and they're afraid to be associated with the US or the UK because therefore they might get attacked. We've seen vessels declare for the first time ever Chinese vessels, because obviously OOCL and COSCO, Chinese companies, and Russian exports, by the way, from Russia oil to China are still transiting through the Red Sea and Suez Canal without any interruption. So clearly, if you're Chinese or Russian, you're safer. And we've seen people say no relations to Israel because they think that if you do have an exposure to Israel, you have a higher risk. Whether or not it's correct, not sure it's accurate, but that's a perception that's out there.
Would you be worried about Israel in particular not getting access to the sort of freight that it would do normally as a result of all this?
Yeah, I think it's already happening. And I think I wouldn't look at a naval blockade in Israel. It isn't relevant because you have the Mediterranean, you have a lot of imports. But absolutely, it's raising prices. Absolutely, cars in Israel are going to cost, again, about $1,500 more per car. I'm sure exports and imports will be hit as well. That has an inflationary pressure on Israel. In my view, the more this goes on, and we think it's going to go on, and the supply chain impacts are going to go on for the coming quarters, then absolutely also the UK will see more inflationary pressures. The US will, just like during COVID, although it's a tad different because the supply of freight is affected, but the demand isn't as strong as it was in COVID.
Now, the extent to which UK stock market flotation slowed last year was underlined today by data compiled by the business services group EY. It says there were just 23 flotations last year, down 49% on 2022, which made it the quietest year since 2010. Those companies which did come to market raised £953.7 million. That was down 40% on 2022. But the picture was a little better elsewhere. Global IPO volumes were down 8% on 2022, while the sum raised globally by businesses coming to market was down 33%. I've been speaking to Scott McGubbin, the IPO leader at EY UK and Ireland, and asked him which other markets had seen a slowdown in activity.
Well, Asia-Pac was down, and as was Europe in terms of proceeds that came in there. The US was actually up on last year, and I think that reflects some of their lower interest rate regime that they've had for a while now, and therefore they're getting the benefit. So there's a bit of a lag effect, I think we're seeing here, for the UK market, and it should come back in 2024-25.
Obviously, there's been a good deal of soul-searching about London's attractiveness as a global listings destination. Do you feel the doom and gloom has been overdone?
No, I don't. I think it has been time for change, and I think the FCA has reflected that, and they're doing something about that. So some of the change that's happening, whilst it has a medium-term impact in reality, I don't think it immediately switches the switch back on for UK IPOs. But it's a good thing. This is really positive what the FCA is doing, and that change is ultimately a very good thing for the UK listing authority.
So you think activity will come back this year? Why?
I think 24 will be an interesting year. I think M&A will come back as interest rates start to fall down, and you see the recovery of private equity money coming back into the market. IPOs will take a bit longer, so I think that there tends to be a bit of a lag in the M&A markets to the IPO market, so I think the first half will be difficult. However, what I also see is that the next year is probably more positive and open for IPOs. We can't discount the US elections that are in there too. They will basically cause a delay in IPO market, so I think we're leaning more towards a 25 market than a 24 market.
What do you think is going to stimulate IPO activity? Will it be private equity-owned businesses, private equity firms looking to exit? Is that going to be a driver?
It'll be partly that. I think there's a number of things that's there. There's pent-up money that's there. There'll be IPOs will be looking to come off the back of those private equity exits that will come there. Good businesses will always be attracted to IPO, and if you look at IPOs as another vehicle to exit effectively, as well as the debt markets, then overall you should see, as the M&A markets recover, a recovery also in the IPO market.
Are there any particular sectors that you'd be looking for activity in particular?
Tech stocks remain really positive. Tech is really where I'd be placing my bets. I think the FCA change is trying to make sure that tech stocks are more attractive in the UK, and I think that will come.
What about valuations? I mean, obviously, the markets are pretty depressed right now. What would be the point in listing now if you didn't have to, if you wanted to wait for valuations to improve a little?
Well, I think you have to be careful what you wish for. There's also this valuation gap between the US and the UK. What we have found is that businesses that have listed in the US haven't performed in the aftermarket as well as perhaps they had hoped. So I think the UK is still a robust market around valuation, and valuations will start to recover as the equity markets come back.
I mean, looking back on last year, Is part of the problem the fact that those companies that have come to market, as you say, the aftermarket performance has been pretty disappointing, whether that's, cab payments or Dr. Martens or whatever, there haven't been too many really shining success stories?
No, there haven't, and that's disappointing. I think that's more of a function of the equity markets, though, as opposed to the quality of the assets. I think these assets should start to recover. If you look back a little bit in time, there was a real swathe of IPOs that happened in 21, 16.4 billion in the UK, and then that really tailed off to about just below a billion now in this time. So there is swings and roundabouts. I would expect that valuations, IPOs, volumes, proceeds all look forward to 25 and recovering in that period.
You touched just now on the proposed changes that have been made to the UK listing rules. Are you optimistic that those will go through and that they will stimulate activity?
I think it's almost certain they'll go through now. I think there's consultation papers that are out there, but that change is coming, and that's a really good thing for the UK exchanges.
And what about the participation of retail investors in particular? I mean, obviously there's talk that the government's going to sell down some or all of its remaining stake in NatWest. Would that be a spur to getting more retail investors on board?
I'm not sure that the retail investor community is what's really going to change the market here. I think it will still be more traditional type investors, pension funds, etc., who will look to invest in IPOs. So I think that whilst that's attractive to retail investors, I think we'll still see the more traditional routes to IPO that we've seen in the past.
Well, still to come here on Business Live, we'll have a look at how the markets have done this Thursday afternoon. Stay with us.
I'm Helen Ann Smith. I'm Sky's Asia correspondent, and I'm based here in Beijing. My most memorable story was covering the extreme zero COVID restrictions.
A massive COVID wave is sweeping this city, but officially, almost no one has died.
This is a 4-lane dual carriageway, completely shut off. Some things are being allowed in, but actually the only thing we've seen coming out is an ambulance. The message from China is clear. This is a modernized military, absolutely able to fight an international war if needed. Is this military ready?
We are prepared to face every kind of challenge.
My biggest challenge is adequately telling the stories of the Chinese people, even when the authorities would prefer me not to.
Hey.
By the rules, we are allowed to film in the streets.
To the left.
I will always remember the atmosphere at the Shanghai protests. It was an electric mix of excitement, fear, and defiance, and a sense that history was being made. It's hard to express just how incredibly unusual these scenes are in China.
There are people who are afraid.
On the streets of Xinjiang, there is still a tension. Heavy police, a sense they're always watching.
It's really an incredible eeriness to this place, and it just is completely abandoned. The Chinese housing market, for so long a driver of growth, is now a real liability. We take you to the heart of the stories that shape our world.
It's actually hard to describe the cold here. It's so intense. It literally takes your breath away.
I can't tell if I'm moving it or it's moving me, but it's a very strange feeling.
The world is watching what's happening here.
Fly Emirates. Fly better. Fly Emirates. Fly better. Thank you.
Well, the oil price is higher this afternoon after the seizure of an oil tanker in Oman by the Iranian Navy. A barrel of Brent crude currently changing hands at $78.84 a barrel. That's up just over 2.5% on the session. In Europe, stocks have finished the day largely to the downside. There you go, all the main continental European indices in negative territory. Talking points this afternoon include BNP Paribas. France's biggest bank is down by 2.75% in Paris after being told by EU regulators that millions of euros worth of capital in its safety buffers are ineligible and must be removed. Well, here in London, it's not been a session for the FTSE 100 to write home about, off nearly 1% on the day. Gains in property and healthcare stocks were more than outweighed by declines in some consumer stocks. The leading blue chip gainer today was Whitbread. A trading update from the owner of Premier Inn has gone down quite well. To the downside, fallers include the house builder Taylor Wimpey and the publishing and defence firm Informa. Both of them had trading updates out today. Marks and Spencer also a faller on the day, despite those really quite excellent Christmas trading figures. Outside the FTSE 100, the online reviews platform Trustpilot is finished up 18% after raising its sales and profits forecasts, while the cybersecurity specialist Darktrace is up 9% for similar reasons. There's been an interesting merger in the property sector today. London Metric is buying its rival LXI REIT for £1.6 billion, I think, £1.9 billion actually, I think it is. That's up 1% on the news. That will create the UK's fourth biggest quoted property firm. Over on Wall Street, well, news that inflation rose from 3.1% in November to 3.4% in December has sent all the major stock indices lower this afternoon. Talking points include Microsoft, which has overtaken Apple to become the world's biggest company for the first time since 2021. That obviously reflects a couple of downgrades recently by brokers of the latter. Meanwhile, Chesapeake Energy is up nearly 7% after agreeing a $7.4 billion takeover of its smaller rival Southwestern Energy. On the foreign exchange markets, well, the dollar has ticked higher on the inflation number. Sterling off 1/6% just now against the greenback, more or less unchanged against the euro. The single currency likewise off 1/5% against the dollar. Meanwhile, the price of Bitcoin, we were talking about Bitcoin this time yesterday, but it's risen by nearly 1% and is close to a 21-month high after the US Securities and Exchange Commission last night allowed exchange-traded funds to track the cryptocurrency. Well, joining me this afternoon is Joshua Mahoney, Chief Market Analyst at Scope Markets. Josh, good to see you. Let's start off with that inflation number from the US, because it is a reminder, as we often point out on this programme, inflation does not fall in a straight line.
No, indeed, and it appears to be as sticky as ever. Look, we were expecting to see inflation move towards the upside today, but it might have been a single tick higher. That hasn't necessarily come to fruition. Instead, we've seen a much more substantial move higher in terms of that headline inflation reading, up to 3.4%. If you look into the nuts and bolts of it, ultimately, this really comes down to the shelter component, so rent prices and the like. And that really accounts for 35% of the total inflation gauge. So where shelter moves, generally the headline number moves alongside it. So the ability to drive down those rents is going to be key. And certainly this is something that people will point to as a relatively lagging indicator. So sometimes it's going to be relatively slow to respond. Certainly, if you look from a wider perspective, why is the market selling off? Because the idea that we're going to get anywhere near that 2% target by the time that markets are expecting the first rate cut, which is March, seems foolhardy at best. And so it could be a somewhat slow return back down towards targets.
Yeah, explains the dollar strength today, I guess. Now, what about this situation between Microsoft and Apple? I mean, this is more on Apple weakness rather than Microsoft strength, isn't it?
Well, it's all relative, quite frankly. You know, if you look back over the past year, both of them have done well. Apple's gained 40%, but Microsoft has gained over 70% in that period of time. And certainly it comes back to the idea that essentially one of these is really driven by that strength in AI, the prospect of massive sort of windfalls for those AI-focused stocks. And Apple, despite the fact it is a tech stock and therefore sort of growth stocks generally sort of lead the market when markets are doing well, this is also relatively cyclical. It is very much associated with how the economy is doing. And when it comes to China, that hasn't particularly been faring well. They, of course, have problems when it comes to inflation and what that might do to their margins. And now we're looking at what's happening in the Red Sea and asking questions about the supply chain and logistics for this firm. So, yeah, we have seen some downgrades for Apple. The stock has by no means fared poorly, but we have really seen that big catch-up play for Microsoft as people jump on board the AI train.
And Josh, what are your reflections on the moves in Bitcoin today? I mean, we got this SEC announcement, as we were saying this time yesterday, it was largely anticipated.
It has been, yes. And quite frankly, the idea that we're going to see massive inflows today has been quite difficult to gauge because the idea here is that we're essentially going to see Wall Street money moving into the crypto market. And on paper, that makes a lot of sense. Bear in mind that if you look at other assets, they can just continue to grow the asset when you see high demand. That counts for currencies, that counts for commodities. When it comes to Bitcoin, 93% of all Bitcoins that will ever be in existence have already been mined. So from a supply side, it's a very strong picture. Now you bring in the demand side and the idea that we're going to see heavy inflows potentially down the line from pensions and trusts and the like. That really tells a big story about the potential outperformance for the year ahead. But in terms of what's happening today, it feels a little bit like we're seeing losses from one side of the markets, the likes of MicroStrategy and the like, and some of the Bitcoin miners that were sort of proxies for the price of Bitcoin, and seeing that money move into the ETF. So it's not necessarily to say that all of the money going into these ETFs are new money to the crypto market.
OK, Josh, got to leave it there. Good to see you this afternoon. Thank you. That's it from me. I'm back again tomorrow morning at 11:30. Hope very much to see you then. Stay tuned. Up next, it's Mark Austin with the News Hour. Cheerio.